Hey everyone, Jim Gonzalez here, EDI Support LLC. Sorry, I'm actually going to have to move because I see a little bit of a glare. My wonderful light is in my face. So hopefully it doesn't bother you. But anyways, so I hope everybody's doing well. It's another Wednesday. We're starting off the year. We're into March, which is absolutely crazy. And today, what we're going to be sitting down and we're going to be talking about is something that a lot of people don't understand, shall I say, in most aspects, or as well as I've dealt with in the past and have engaged with numerous of clients over the years, is understanding your contracts. Taking a look and saying, is the month-to-month EDI too good to be true in 2026? Or is 2026 the end of long-term EDI contracts? In my mind, it should be the end. And the reason it should be the end is from a earn it type aspect. But a lot of people in the software and investments and all of those things are not going to agree with me, because the simple fact is, let me give you a little business insight. Most of the organizations, when you take your organization to being a public organization or to being investor-backed organizations, they like to know what's your income that they can essentially commit to on a yearly basis, or 2 years, 3 years, 5 years down the road, so that they can also see what that organic growth looks like. And they can understand that. And they can know that, hey, if I'm investing in your organization, I know what it's for. So is it for the benefit of you or for the benefit of them? It all depends on how an organization spins it. And the biggest thing is why we're looking at it is we're going, why this contract and this conversation matters the most is a lot of people and a lot of organizations are still asking for a full 3-year commitment. Well, I don't know what my company is going to be like in 3 years. And most of the people don't know what their organization is going to be like in 3 years. So what we have to do is we have to say, okay, if I'm committing to you and I'm getting your EDI service, platform, product, what are you committing to me? Is it just price? Are you committing service level? What all are you going to commit to me when it comes to that 3-year contract? Because I know your organization is going to be different and things are going to be different. And what's that going to look like in 3 years? Again, you can play both sides of it. SMBs have to look into, do you want to lock into a 1 to 3 year agreement? Do you want to have an auto renewal clause that's built into it? Read those fine prints of your contracts and see, like, if I had a trading partner, does that renew my contract another extended year? If I increase my, transaction volume, does that auto renew my contract? If I'm doing less than I did previous years in transaction volume, because maybe there was a slide off, or who knows, with the way things are in this world, maybe it's harder for me to get my products in the supply chain. We've all seen effects in our supply chain. What does that look like? What does it look like if I do an early termination? What am I going to owe you, or what can I recoup? So think about those things when you're looking at these multi-year contracts. And again, is it advantageous for you, or is it for them, or are you both winning? Again, my take is I try to sign the smallest amount of contracts as I can. Typically, I like 12 months, 1 year. So I'm not looking so far out. Now, in the EDI world, if you got a great platform and a great product and great service and all of those things, am I going to work with you longer than a year? Yeah. But I don't know where you're going to be at in a year. Are you going to sell the company? Is the whole customer service team going to disappear? Are you going to try to use AI to be your customer service and handle all of your customer service? What does that look like? Nobody knows. So again, I like 1 year. 1 year contracts help. I think they're the easiest things. Think about it this way. If your EDI provider knows you can't leave for 36 months, how motivated are they to improve? How motivated are they to give you a high level of customer service, change their platform, add features, add functions, do all of those things to make your life easier? They're not. They're really not. They got you locked in for 3 years. What does that look like? Status quo. Why should we invest so much into customer service or adding enhancements or doing all these things? If we do that, we want more money. That also shouldn't be the way that it works. You know, as most of the people on here that are watching these videos, you know, they know that we've rolled out Elevate as our own platform. I took a lot of these things into occurrence and I said, what would I want to do if I'm sitting on that other side? Most people don't know I play a lot of devil's advocate when it comes to things. You know, I look at the positives, the negatives, the what ifs, all those things and try to figure out what's fair. Ultimately, what is fair? You know, so you have to look at that when you're looking at your contracts. You know, the history of the EDI contracts back in the day, way back in the day, remember I've been doing this for over 28 years. You know, when everybody had to use a van and they had to use dial-up modems to send transactions and do all those things. You know, you had the baud rates, you had all the handshaking. Yeah, I'm talking old school stuff. Your vans required long-term contracts commitments because, again, they had to set up the infrastructure in order to handle you. They had to set up all the communications and do all of those things, and it wasn't cloud-based. It was a physical server. Somebody literally had to set you up on a physical server or a physical modem and all of those things, okay? Now that we've moved to the cloud, that thing's been easier. You know, there was higher onboarding costs. Vendors needed to protect the revenue. They needed to understand what's their profit margins. What does the team look like? Can the team grow? Does the team not grow? All of those things. You know, it was really an enterprise first model that also then trickled down to the SMBs. Because a lot of things start with, in this world, start with the big companies, the big push. We need to be at the latest and greatest. We need to do all those things. We need to be nimble. We need to blah, 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 blah. Well, they were all focused on enterprise level, not your SMBs. Your SMBs don't know where they're going to be at in 3 months or 6 months or a year or 2 years or 5 years. They can plan it, but it all depends. Some of them take off like wildfire. Some don't. Some stay stagnant. It all depends on what they're doing and what part of the market they're in, you know. But the market has changed. We got cloud infrastructure. We got faster onboarding. We got AI helping with that. We got lower setup costs. It's lower costs for setting up a virtual server in the cloud than it was 10 years ago. So why should we be looking at pricing that's greater than what it was 10 years ago? Yes, there's inflation. There's all of those things, and I totally get it, and people should get salary increases and everything else. But you're not spending 10 grand on a server, 15 grand on a physical server, and then all the software and up fees and all of those fun things. All that's gone down. You know, there's remote support models. Heck, I've been working remote I figured it out the other day. It was pretty crazy. So in 28 years of doing this, I've literally been working remote for greater than half of that. So 16 years. 16 years I've been working remote. What does that mean? I get to work out of my house. I get to play with my dogs. I get to do the wash. I get to do all those things. So why should my contracts be the exact same as what they were back before I started working remotely, when we had a lot higher costs and infrastructures and all of those things? So why are contracts still long? Again, is it to the benefit of you or is it to the benefit of them? Is it an investment benefit? Is it a forecasting benefit? Is it a renewal benefit? You have to figure out while you're reviewing those contracts who's winning and who's losing. And it could be in different sections. You know, if you add more trading partners, well, You're adding more trading partners. You're growing. Your business is growing. Do you want to extend your contract or not? Read all that fine print. The real risk of long-term contracts, at least in the EDI contracts, you're looking at vendor complacency, where that customer support could go down and dwindle. You're an existing and long-term client, and that doesn't necessarily mean as much as it did 30 years ago. They might look at you as a lower profit. Who knows? You're looking at locked in pricing, even if volume drops. Why should I be paying the same amount if my volume's dropping, or my business is starting to dwindle off a little bit? Maybe it's in a downslope, and I need to figure that out. Every business has that. You have a business where you're going to maybe doing this, and then you'll plateau, and then you'll do this again. If you're constantly doing this, great. But what happens if you do this, and you do this in your business, and your contract is still focused like you're doing this? That's an issue, Or you want to get out of that contract and it has high expense costs to exit. Like, I signed a 3-year contract, my business dwindled off because I'm no longer, maybe I was a COVID focused business, and I was doing the latex gloves and all of those things for safety and protection. And God bless you for being a part of that supply chain. But think about that. Think about what that looks like. Okay, now you've plateaued or you've gone down a little bit, but your contract that you're still paying was when your business was booming. Should you still be locked in at that? What if you want to break that? What are we looking at? Do you have any leverage if SLAs aren't being met, or support starts to decline, or they're doing major layoffs, and all of a sudden things happen? And I can tell you that's happening in the EDI world. It's happening in other businesses, but it's happening definitely in the EDI world. Look at these major players that are out there. The big boys and girls that have big teams, or used to have big teams, don't have big teams anymore. Doesn't mean they're nimble. Doesn't mean that they're going to reduce their contracts that they have you locked in, because guess what? They're not going to. So they're removing overhead. They're adding in additional profit by pulling different levers. So are you paying for features also that you don't use? When clients, and I use this as an example. So clients, our typical hourly rate is $200 an hour, billed in 15-minute increments. I can speak to EDI support. When clients come to me and say, hey, listen, can we negotiate on your pricing? I typically will come back and say, hey, what part of our services don't you want? Because if you don't need all of our services that we have baked into that $200 an hour at 15-minute increments, what can we remove to make it better for you? You want project management gone, you want oversight gone, supervision gone. What do you want removed? And if they say, well, no, I just want you to reduce the price because I can get it cheaper over at XYZ, I typically say, that's cool. XYZ, I think it sounds like it's a better fit for you because I know where we are in the marketplace. I wish you the best. If things should ever change, you can come back and we can have another conversation. But we might be higher than $200 an hour at that point, depending on when you come back. So it's the reality of your business. It's understanding what's the business cost, what do those things look like, and you negotiate if you don't need all of those services and all of those reports and AI functions and features and who knows what it is that's a part of it. Maybe you can get the price lower. Maybe you can get a shorter contract. Maybe you can do all of those things. The biggest thing is, think about this. Would you sign a 3-year CRM contract without flexibility? So I'm talking like you're using, who knows, Salesforce, Zoho, all these other software platforms that are out there in the CRM world. Would you expect to sign a 3-year contract with them, a 5-year contract with them? I can tell you no. I just shopped for new CRM software. I just shopped for new ticketing software. All of those things. I'm not signing multi-year contracts with them. So in the SMB world, why does month to month make sense for you guys? It's flexibility. Business volumes fluctuate month to month. Maybe you're seasonal. Maybe your product, again, it had a big ramp up and then it plateaued and then it went back down, or big healthcare claims. I'm not trying to just make it focused on retail, because in the EDI world, it can encompass all kinds of things. Insurance, it can be retail, it can be healthcare, it can be transportation, logistics. It can be all those different things. So maybe you're doing less trucks. Well, think about it. What do you want to pay? And what makes sense? And how long does that contract look like? You also have accountability. The providers must earn your business every month on a month-to-month. And I'm giving you insight into why, again, I'm dropping it, why we went with Elevate, and I based it on a no contract, month-to-month, all of those things, because it's focused for your SMB market. The people that don't know what they're going to be like in a year, 2 years, 5 years down the road, or 6 months. Who knows? Scalability. Grow or shrink without penalty. Trading partners go down, your costs should go down. Your volume goes down, your costs should go down. All of those things. You have risk reduction. If the services start to fail and SLAs aren't met, you're not trapped. You can go elsewhere. You can go to other places and other things. And if you truly need a contract in place, and again, I've said this to other entities that have come and said, oh, well, what about Elevate? We don't like that there's no contract in place. Okay, let's put it on your paper. How does this contract look? Make it advantageous to you. Now who's winning? And if everything in there is a acceptable agreement between both our organizations, I'm okay with the contract being on your paper. So you have to think about those things. It aligns with how modern SaaS works. AWS, Shopify, most SMB tech stacks are not having you do multi-year contracts. They're just not. So why should you? It doesn't make any sense. So why not EDI? Why not EDI for not having these long extended contracts? Just because the big organizations that have been doing this for 20 some years have it, doesn't mean you have to do it. Your business doesn't need to run like other businesses. That's the beauty of this. That's why you start your own business and you do these type of things. The common objections that we hear for month-to-month providers here, oh, your setup costs are too high. Why is that? Because that's when we're doing most of the work. We're setting up your stuff. We're not spreading it across the contract that we have for 3 years. It's called modern onboarding. It's faster and cheaper. Vendors need revenue stability. No, they don't. That's a vendor problem, not an SMB market problem. Again, I try to sit on both sides of the fence and understand, what would I pay for? How would I work a contract? How would I do those negotiations? Fun thing on a personal note, I just got myself a new vehicle. Well, guess what? I worked that contract. I definitely worked that contract. My wife's better than me, though. I will say that wholeheartedly. My wife is, don't want to negotiate against her. She will have you handing her everything. But anyways, you'll end up looking at you'll pay more monthly. You will, maybe slightly, but flexibility offsets risks. I can say most EDI providers that are out there, if I look at them against Elevate, our Elevate pricing is a lot lower. And some people hit me up with that. Why is yours so much lower? Why are you not doing contracts? Because mine is built for 2025, 2026. Mine's not built for 1995. It's not a contract like that. And nor is it a platform like that. It's built for today, based off of what my costs are today. And what does that look like today? And I have highly experienced people of 10 years or greater sitting on my team helping out with Elevate. So I'm not trying to make this about Elevate. I'm just trying to give you why people have said things to me. Oh, it's not sustainable. You can't stay like that. Yeah, I can. I'm doing it, and I'm going to continue to do it. Many modern SaaS companies operate this way. Look in the marketplace. Look again at CRMs. Look at your ticketing systems. Look at whatever, your AI platforms that are out there. They're not making you sign multi-year to use Claude or ChatGPT, or to use any of the other ones, Gemini, you name it. There's a whole bunch of them, and that's going to continue to grow. What SMBs should negotiate, if they don't go month to month, negotiate this. Negotiate it to being annual. Some of them will say, well, I can't get you this dedicated pricing annually. I can only get it and offer it at a 3-year locked-in contract. So you want 3 to 5 years. No, listen, negotiate annual. I'm willing to bet those salespeople will get you the same price on an annual basis for the most part. It's almost like walking away from a car dealership and saying, hey, listen, I don't want the car. Call me when you're ready to negotiate. Have exit clauses tied to the SLA. No auto renewal without written approval. Got to get somebody to sign off on that auto renewal. Guess what? Now all of a sudden you're gaining control. You're gaining insight. Transparent pricing resets. What does that look like? Is it a 3-year, 3% increase, 5% increase? What does that look like? What do you think it's going to be? You have to look at what's a migration and export rights. So if I need to migrate from your platform to another platform, can I do that easily? Or am I stuck? I can't get any of my residual data. I can't get historical. I can't do all of those things. So you have to basically have practical leverage in this. Amongst the world, there's a bigger industry shift, especially in EDI. This is the future. There's a lot of people and a lot of organizations that are out there that you might not have ever heard of. SMBs demand agility. Cloud native infrastructure reduces vendor risk. Competition is increasing. Transparency wins. Think about all of that when you're looking at your contract, when you're thinking about things in the EDI world. If your EDI provider needs a 3-year contract to keep you, that says more about their model than your business. So think about that. Look at what that looks like. The things that I want to leave you to think about is, how long is your current EDI contract? When can you get out of your EDI contract? Have you ever tried to exit an EDI agreement? Has it been a nightmare when you tried to do it? Would you choose month to month if you were offered it? If they said, your current provider said, hey, listen, you can go month to month, same pricing. Would you take it? Those are the things I want to leave you to think about. Again, I'm Jim Gonzalez. I'm with EDI Support LLC. I'm here to answer any questions, help you out, give you insight. We're just trying to make a little bit of a difference and give that educational aspect out there. So I hope you are well. I hope you stay safe. It's a little rainy here in Pennsylvania, but we're all doing well. So you take care, and I will talk with everyone later.
Meet Elevate, the modern cloud-based EDI platform designed for growing businesses that may or may not have EDI experience and deserve better. No installs, no servers, just secure real-time EDI that works for you anywhere. Get EDI compliant with 200 plus retailers like Walmart, Target, Chewy.com, Amazon, and more without the hassle of endless back and forth. Elevate automates every document, from purchase orders to shipment notices to invoices, so you can focus on fulfillment, not formatting. We set up your trading partners, map your data, and test every connection end to end. Once approved by your trading partner, you go live quickly and confidently. Have an ERP? You can now easily connect Elevate with your ERP via APIs, CSV, or XML, or use any flat files. All systems will now talk to each other. And when you need help, you get real humans, not bots. We're your EDI team, start to finish. Transparent pricing, no contracts. EDI that actually works for you. Elevate your business today with EDI that cares.